Hi there. Welcome to the closing bell on the 26th of May for me. And look, there's a bit of movement going on out there. A few interesting things that I think are worth just chatting about, looking at some of the bigger markets and getting a sense of, how precarious things, I guess, are set up. So let's get stuck into it so I can cover a few bases for you. First of all, starting with the US 2-year bond yield. So this is one of the fastest moves from the zero bound up to nearly 5%. There's 5% on the 2-year bond. And, this is what everything's about, isn't it? Really, this is one of the most important charts out there, I guess, to get a sense of where US rates are going to be over this next few years, what the market thinks. And, we've had a big drop when we had the SVB, that sort of thing, the collapse of those regional banks, etc. And rates were up around 5%, and they collapsed to around 3.6% over the last few months. We got a bit of a rally on in the markets, thinking that they're going to cut rates pretty quickly once they reach the highest level for the rates, and the market was pretty convinced of this. There was a lot of safe haven buying as well that saw the yields drop. And that's being reversed, and quite quickly at the moment, with the Fed out there sort of jawboning, saying we're not really ready to start cutting rates yet at all. And maybe we've got another one to go in June. So we're seeing quite a dramatic move in these yields, and it should be creating weakness, shouldn't it? Especially in the tech stocks. But the Nasdaq is rallying. So, what's going on? So just want to point out, the sharp move we've had, going from 4% up to around 4.53% as I put this video together. That's in 2 weeks. So this is a weekly chart. So that's a really serious move higher. And stocks haven't really reacted in a very negative way yet. So you've got to be aware that we are seeing this quite dramatic move in those bond yields, and it's going to put pressure on things like the commercial real estate sector. That's still seeing selling pressure. Is that going to heat up now that those rates really are going to stay high for a long time? Because you've got to remember, if those rates stay up around this 4.5–5% for months and months, there's going to be more and more people rolling over debt, etc., that are going to be coming under pressure. The market was hoping this was going to be a nice high, and then, okay, we've had enough and it's going to drop rapidly. But that doesn't seem to be playing out. And the Fed wants to make sure the market knows that they are keeping rates there for a while to make sure inflation really does get snuffed out. So it just increases the risk that something could break along the way. And we've got to be aware of that going forward. But the Nasdaq has been performing quite well, and this is the reason. This is a daily chart of Nvidia, which is making those chips for AI. Obviously a big beneficiary. They've had a massive run as the AI juggernaut has taken hold in the market after the sell-off into the middle of last year, hitting 120. Look at that move. And then just the other day, they jumped from around here up to here, a 25% move. Now the market cap increased for them around 200 billion US, and the whole GSP, or gross state product for Queensland, is just a little over 200 billion. So Nvidia's market cap in one day jumped about the size of Queensland's complete output. So put that into perspective. Quite amazing stuff. So what we're seeing is that underneath the surface, there is weakness. The breadth of the market is lowering as less and less companies are participating in the rallies. So if I just show you quickly the Russell 2000. So this is the Russell 2000 index, showing you a really wide universe of US stocks and how they're performing. And this is a monthly chart. So just notice monthly downtrend definitely in place, still selling off currently. So if we're looking at the move we're seeing, and I will be showing you, this move from 2020 up to the high. Notice that it's sort of met that midpoint and then rallied back to the moving averages and is selling off again. There you go to another monthly sell pivot a couple of months ago and trading near the low of the range. So that's not looking that flash. So that's the situation in the wider market. And now let's have a look at the Nasdaq. The Nasdaq, on the other hand, rallying strongly. And a lot of this is on the back of that Nvidia and the rush into the AI stocks. But we have interest rates rising rapidly, which usually sees selling pressure in these tech stocks. So we have to be a bit wary on this rally as the breadth shrinks and there's less and less stocks participating. If Nvidia sees some selling pressure, if it's gone a bit too far, watch out, I guess. But also, the other stocks really aren't performing that well. So the index isn't necessarily showing you what's going on beneath the surface. And if we just have a look, we've had the 2020 rally up to the highs. It's sold off even below that point of control, the midpoint, very important level. Ended up finding support, created a monthly buy pivot middle of last year, and has ended up starting to march higher. But it's still in the monthly downtrend and is now racing up towards that danger zone, isn't it? The sell zone of that wave. So it'll be interesting to see what happens here with this Nasdaq, 14,263 up to 15,500. If we get a spike up in there and failure, that's sort of what I'd expect to see from here, the way the rates are moving, etc. That's the possibility, but hasn't happened yet. So it's a thing of wait and see. But, very impressive performance, no doubt, by the Nasdaq at the moment. Does it switch the long-term trend to up? I guess that's a possibility. But I'm also looking at this range here and considering the high and low of that range. Yeah. So there's the low of the range. And just considering, we've got a range set up, a little false break of the low, a chance of a false break of the high too. And so failing back below that high could set up a little false break and a move back to the midpoint. And there's just a little setup here, I think, that it could actually find a lot of resistance up in this area. So that's what I'm expecting to see. But that's, again, wait and see. Let's see what happens over this next few weeks. But there is a lot of resistance above. And this is the monthly on gold. We've been chatting about this, the retesting the all-time high. We've got the range, this huge rally over the last few years, then the correction. And that's the range that I'm interested in. And we've got the point of control of that range around 1875. We've also got the long-term uptrend, 10-month exponential, and the 20-month there. So that's the major support on this move lower. So you can see that the rates rising is really starting to hurt gold. So we had a sniff up there, and the last few weeks, the interest rates have really started to ratchet higher. That's hurt gold. So gold is starting to sell off, but expecting to see good support down there around that sort of 1900 to 1840-ish region. So let's just see how it pans out. But you can see that false break of the high did end up happening. I'm actually got a weekly sell pivot. So there can be more downside here in gold. Not much support really around here. now that it's turned down. So really, I almost would expect this to probably head back to that 10-month moving average and that midpoint. So, target of around 1880 on gold in the short term. And then let's see what happens from there. And a lot of that weakness in gold, obviously on the back of, a strong US dollar, on the back of rising interest rates. So the question is that the theme for the foreseeable future? And it possibly could be here with the US dollar turning back up. Just want to point out a few pointers or levels for you to keep an eye on. This is a monthly chart. You can see that long-term range that it was in for years and years. The top of that range sort of coming in around this area, this sort of 100 area. That's 100 for that US dollar index. And also, those highs got up to about, 103 or something. So that was the high of the range for, 5 or 6 years. So massive support ultimately once it does break out. So we had this big run in the US dollar, and the heat came out of that over the last little period, bringing it back to retest those old highs. So that's interesting from the point of view of if we're going to turn back up. Makes sense that sort of happens. Have the big breakout, retest of major support, and then turn back up. So that's sort of set up well for that. Also, if we're just looking at that wave higher in the US dollar from 2021 to 2022, 23, the midpoint of that coming in around 102. We've had a retest of the point of control there and the long-term moving averages as well. Got the 20-month simple moving average there. Gone and retested that as well. So this is the area where you'd want to find support if that long-term uptrend is going to continue. And we are seeing that at the moment. The final piece of the jigsaw is that we do have potential of a monthly buy pivot. So we had the monthly sell pivot here and marching down, lower key bars, lowest price in the move there, monthly close above the high of that bar, and also back above the 10-month exponential moving average within a long-term uptrend. That's usually a pretty good indicator of potential that it's going to try to turn back up from this zone. So just technically, end of this month, we get that confirmation. May see weakness, but should see buying support and potential for the US dollar to have a bit of a run, which is, bad for the Aussie dollar. Commodities coming off the boil. I've been saying a while ago, copper looking a bit dangerous, and that's continued to sell off. So this is the copper price on the weekly basis. A couple of weeks ago, I sent that warning saying, oh, it's really looking dangerous, possible monthly sell pivot coming up. Weekly trends turned down. You can see that wave higher, retested that point of control area, rally up to the sell zone, and selling pressure was there. Slowly trying to turn down, and then now it's accelerating now that the weekly trend has turned down. So, next port of call is getting through this point of control, 350. And just the risk is because we've already had this retest, we've gone up to test the sell zone, and now it's saying, yes, the selling's there. You then just set up the potential of the break and the move down to that buy zone area. So that's the big picture, but that can take a long time. Copper's notorious the way it moves. It could move like this, end up finding buying support, have another go, buying support again, another go, and end up there. But, it's 2024 sometime, or, it can take time. But that's just the big picture technical on copper and other metals as well, looking similar. It's all sort of pointing to that, stronger US dollar potentially affecting things. So rates higher, US dollar higher, commodities lower, Aussie dollar lower. That seems to be the theme for the moment that we have to be prepared for. So let's have a look at the stocks. So this is the S&P 500, and quite amazing how price action can just always take you to the very edge. You know, last week it was just trying to bust up through those highs. It was like, boy, it's if it can carry on, and I was saying last week, you know, if it can actually bust up through that past high around 23.27, 23.50, oh, sorry, 43, 27, 43.50 in the S&P 500, up through there, watch out, can really bust up. But as long as it stays below there, it can still fall over. Just want to explain that quickly for you. The daily chart here of that S&P 500, and just tracing out those waves and then the sell zone of those waves, 75 to 87% retracement. Just notice where the selling pressure came in. Then we've got the next wave down. Then I've traced out the sell zone of that wave. Look where the selling pressure came in. Ended up coming in just below it, but at the 200-day moving average. Got hammered from there. And then we've got the last wave, and this is the important one. This is what we've been just really trading in for so long. It's just so dull. But we're looking at that wave. We're looking at the sell zone of that wave. Been rejected a number of times. And here we are. We've just been trading in that sell zone just for a couple of months, 3 months nearly. The selling pressure is there, but it's being soaked up. So this is where it's been difficult. Price is still above the 200-day moving average. Below there, it starts getting dangerous. But is the selling pressure going to be enough to overwhelm the buying and, you know, shift the weekly trend down through that 200-day and really set off the chain reaction and down through, you know, that 3,800 levels massive under there, lights out. So it's still, you know, in that really difficult phase, isn't it? What's it going to do? Hasn't quite sold off yet and far enough, has it? But it is dangerous, especially with rates doing what they're doing. So everything's still the same. Back up through there, back up through 43.50. It can all take off. Cover your shorts. As long as it stays below there, the structure is the same. Sell zone, smashed. Sell zone, smashed. Sell zone, lots of work, but still could get smashed and keep that whole downward structure in play. But moving on to the ASX 200, and that one is looking a little iffy, and we may underperform. I mean, if the US has all of this money going to AI, we don't have much exposure to that. That's the only thing running. So we may not really participate, especially if commodities are getting hammered. So looking at this whole structure and why I'm a bit nervous, this is a monthly chart. We've got that big wave down from the all-time high. And we've had the rally into the sell zone of that. And yes, it's gone nowhere for ages. So it's just on the edge of creating, a monthly sell pivot. So if I just follow up really quickly, because this is quite important, the way it's all just setting up now. If I just give you that sense of this strong wave down, the sell zone of that coming in there, months of price action between the sell zone and the point of control of the wave. So that's where the buying support comes in, and back to the sell zone again. Lots of work done. Which way is it going to go? There's your high of the move. There's the low of that. And a monthly close below there will create the sell pivot. So we're right on it at the moment. A few days to go in the month. What will happen? Don't know. But worth keeping an eye on. So just looking at that, the low is 71.38. Price at the moment 71.47. So it's Friday. We've got a few days left in the month to go. But under there, you will have really major wave down, major wave up into the sell zone, monthly sell pivot, next wave through there, down into the buy zone. And if it does crack the low of the structure, you've got lights out. So it's just a setup that can lead to some bad things. So I'm just a bit wary. Haven't been trading too much. Have actually put a bit of a hedge on for people, and am just waiting to see how this will pan out, because bigger picture, you're looking at, 07 highs and 2020 high. So if it fails, that's like the big false break, and it could, have a bit of a big clear out. And I'd be a big buyer down there if we saw something like that. So that's how things are looking. It's just an interesting setup. Wanted to point out quite a few things for you, just so you know the state of play, and that we're on the edge. We're a bit more selling, and things could get a bit interesting. Right, cheers. I'll come back with more next week.